the program so far, I want to give you a bit of background for our next segment, which is the big pitch idea, which is in fact an idea I had when I attended the San Francisco Sohn conference, and that's where I met Jay. And in San Francisco, they run a big pitch idea. They run Stanford against Berkeley. Exactly. So here we reached out to HKU and UST and we asked them if they wanted to submit some applications. So out of about 8 submissions, we came down to 2 individual teams which are going to present today. Both of these teams are from UST. One is undergraduate, our first team, and then we have the second team, which is postgraduate. Now, before we go right ahead, I wanted to just thank our judges. We have Dan Rupp from Parkway supporting us, Steve Bernstein from Lone Star, Lloyd Moffat from Wickham's Hill, and Delphine Lecourt, who's our latest board director. So they did an amazing job in trying to train the kids, and also Black Isle helped with the preparation of those wonderful young talented individuals. So let's hope that this is for you a pipeline for your interns or for the next wave stage at some point. So Team Horizon, please, up on stage, and good luck.
Okay, good afternoon, everyone. I'm Brian, and this is Anna. So today, we're gonna present to you an investment idea on Alphabet, also known as Google, with a 66.1% upside and a wide margin of error. So let's begin by allowing Anna to talk about what Alphabet's business model actually is like.
Yes, thank you, Brian. Our thesis is based on 3 pillars. First is the risk deal, and first is the risk deal, and second is the overstated threat of AI search engines, and the third one will be the Gemini power. Let's go through a business review first. Alphabet with a global search and digital ads, and also with Android, Google Search, and also Google Cloud Platform as the main segment revenue. And talking about due to this diversified portfolio and the financial strength, we can believe that Alphabet is a worth investment. And also, talking about this, we can see that why the market is over as pessimistic due to this risk, because Alphabet has a trading at the far lowest multiple among the Magnificent Seven, which is because the consensus estimates the growth, Google's growth to decelerating. And our first thesis will be the risk deal, because about the extrapolation of the past anti-lawsuits, and also the 3.2 billion financial blow if the deal collapses. The market is very pessimistic about this, and also with the since we think this risk deal is overestimates of the risk, because there is the core function of risk is the secure cross-cloud data capability of management, which posing no antitrust, privacy, and also security concern. Also, if the deal collapses, we have only $3.2 billion. It's merely 3.3% of the balance of the cash reserve of Alphabet, which is a merely minimal downside for Alphabet. And the second will be the Google Cloud enables the risk deal to capture more cloud customers, because of, you can look at the red area. There's 12% of Alphabet having the global cloud computing market share, which is rather lower than the competitors. Because of this, and also it's highly insecure to have transferred the data cross cloud, which have a high switching cost. But with the risk deal, we can eliminate the switching cost and also drive the market share growth with 22% towards 2030. And you can look at the chart, we can see that we believe the risk deal enable Google Cloud Platform to expand the market share in the rapid market and also with the 55% CAGR. And the second will be the AI search engines. Due to the introduction of the Perplexity and ChatGPT since 2020, you may think that people start using these AI search engines without Google search. However, it's not. Google search dominates the market with this rising advertisement revenues perform even better since 2022. And also, the AI search engines lack of purchasing size, search usabilities with lack of real-time data, and also the personal reviews. Also, Google Ads have on-site ad revenues, which leading that Google AI search are still far a competitive threat to Google search. And now, Brian will talk about what's the Gemini's competitiveness.
So, we believe the world is sleeping on Gemini. When we talk about artificial intelligence, it's always the name of DeepSeek or ChatGPT that comes to our mind. However, when you look at our slide on the left-hand side, where green is the best, red is the worst, yellow in between, you can see almost at every time, Gemini is in the green side. So, it represents that Gemini is one of the best in terms of cost efficiency, intelligence level, and also output speed. And Gemini isn't just an amazing AI. It is also integrated into different segments of Google, lifting up different core segments' revenue, potential, and resilience. But every investment carries risk, including our thesis. So we made a risk and mitigation slide. When you see it, it's quite obvious that our risks are like risk deal failure, potential tariff impacts, and AI search cannibalization. They are all material risk, and we factored in every single risk into our bear case DCF model, and we still yield a $159 per share revenue fair estimate, which is just a 6% downside. So this, compared to the 66.1% upside, is quite a large margin of difference. So our catalyst would be something that make the market think the same with us. And it would be the 2026 year revenue and EPS beat by a 19.5% margin. So this would reassure the market of Google's core competitiveness, potential, Google Cloud, and many more, so that the market would think the same with us. Last but not least, we carried out DCF and also trading comps to evaluate Alphabet. And the final conclusion that we have is a fair value of $281.7 as a fair value. Compared to the current price of $169.6, it is a 66.1% upside, showing quite a large margin of return and a huge upside. So thank you very much.
Thank you very much, Anna and Brian. And please, a big round of applause, because it takes a lot of courage to get up in front of 200 people as an undergraduate student. So very quickly, the teams are judged on the investment idea, the research quality, the risk assessment, the communication and storytelling, and the professionalism. And with that, without further ado, are you ready, girls? Yeah? Okay. Payne Prospectus is our next team. Please welcome them up on stage.
All right. Good afternoon, everybody. Thank you so much for listening to us. Before we begin, we would like to extend our gratitude to the judges. to this SOHN and Karen Leung Foundation for allowing us to take part in the investment pitch competition. And with that, let's begin. So we want to begin by exploring our investment opportunity. When we were looking for investment opportunities, we found that there is a rising demand in the EV sector. The consumer demand is going up all across the globe, particularly in China and US. We're seeing the biggest market demand with 50% CAGR for China and 40% for US. So then we wanted to ask ourselves the question, what do consumers want in EVs? Well, based on consumer research, we know that consumers want three things. They want long driving ranges, they want advanced safety features beyond what's stipulated by government protocol, and they want all of this at a low cost. So 44% of consumers said that they wanted advanced safety features, and 42% said they'd switch brands for those advanced safety features. So then, given this is the demand, we want to know what kind of solution is there to address this demand. Taking a closer look, we found that glass might be the solution. The automotive glass industry has evolved from just a commodity windshield providing service to a technology enabler, becoming the hardware to introduce exciting and innovative opportunities in the automotive industry. So we have HUD, head-on display glass, that allows us to bring augmented reality into our cars, where we can see navigation on our windshields and have telling us what the speed limit is in front of us, telling us we're going too quickly. All of these advanced safety features that we couldn't even imagine at one point. We also have lightweight glass or ultra-thin glass. This is crucial for energy efficiency. We're noticing that over the span, EV cars tend to have more glass in them than regular cars. It's increasing from 4 meters square to about 5 meters square. This tells us that the weight of the glass matters because it determines the weight of the car. Lower the weight, more the energy efficiency of the car. Then we also have canopy sunroofing with dimmable glass that blocks 99% of UV rays and 86% of infrared rays or heat. So we're able to better maintain the temperatures inside the car, once again improving the energy efficiency. We also have photovoltaic glass. We have solar energy generating glass that can power auxiliary devices like climate control or even charge your phone on the way. So with all of these new technologies coming in, again, who can provide this for us? Well, the automotive market share is, 90% of the automotive market share is handled by these four companies. We have Fuyao from China, we've got Sohn from France, and we have AGC and NSG from Japan. Amongst them, Fuyao stands out. Why? Because Fuyao holds 34% of global market share, and it has gross profit margins of 36% and net margins of 19%. All of this tells us that Fuyao is not only a global market leader, but also it tells us that it's able to generate the highest profitability amongst its peers. So with all of this information, now I will hand it over to Wheela to talk about the competitive advantages of Fuyao.
So with the growing demand for premium classes, that Fuyao has been investing in the transition from their commodity product to their high premium products, or what we call high value added glasses today. And those premium products has contributed to around 60% of the auto glass revenue for them as of 2024. And also that contributes to almost 5% of the total revenue increase compared to last year. As we know that whenever a glass manufacturing company launches a new product, the average selling prices will be going up, and that directly impacts their revenue and gross profit margin. So in 2024, driven by the new launches of the product, their average selling prices go up by around 8%. That directly pushes up their gross profit margin to around 36%. So with their ability to generate such a high revenue and the high profitability, they have a stable cash flow year over year, and they are willing to pay back the shareholder with a high dividend payment. And as of 2024, their dividend payout ratio is as high as more than 60%. And also because Fuyao's unique business model, they try to integrate the supply chain into the glass production, and they try to localize their production in overseas market. That really makes them a cost leader in the industry, and also make them more resilient to geopolitical risk. So let's take a look at the three major markets for Fuyao glass. So headquartered in China, they have two sand mines. Those sand mines will produce the raw material for them. And because of the price of the raw material fluctuate a lot, so if they own the production supplies of them, they gain a higher pricing power compared to the peers. And also US as the largest market for overseas market for Fuyao, the 70% of the revenue generated in US are from their local production in Ohio. That really helps them to avoid tariff under Section 301 and 232. It also limits the US-China trade exposure to around 5%. And similar thing happened to Europe market. The 40% of the revenue are generated from the production in Germany. So even though with a low exposure to geopolitical risk, they're still trying to eliminate that by expanding their production capabilities in overseas markets. So currently, they're building up their expanding their plants in Ohio, and they're planning to build up a new glass plant in Illinois in the near future. So if those projects done, they will enhance their ability to against the geopolitical risk. And also with Fuyao's global footprint, they have their major plants built up across continents in Europe, China, and in US. And those plants are pretty close to their key clients like Tesla, Volkswagen, and BYD. So the reason they do so is closer for the plants to the EV car makers, the faster they can deliver the product and lower the shipping costs. And finally, we come to our valuation part. So based on our valuation, we expect the stock prices to achieve an upside potential around 17 yuan in near future by factoring our assumption for the revenue, cost of goods sold, and capital expenditures. And here we would love to mention the downside risk as well, because the tariff might be lower or eventually eliminated in the longer run. That will impact the revenue of Fuyao and stock prices in the longer term. And lastly, let's look at the PE multiples of Fuyao compared to the industry peers. The PE multiple of Fuyao is relatively lower, and also compared with the S&P 500, the PE multiple of Fuyao is relatively lower as well. So Fuyao is relatively cheap to buy right now.
With that brings us to the end of our presentation. Thank you so much for listening. And if you want to talk to us about this, we would love to discuss this topic in future.
Thank you. Great presentation. Great presentations throughout the day. Before we close, and says stick around for a bit, I want to invite basically the judges of the Big Pitch Idea on stage, together with all of the students. Please give them another round of applause, for their courage to come up here. Come on, guys, let's get up on stage. We will be Go. Don't be shy. Not students anymore. So, thank you again, Team Horizon and Team Pan Prospectus. Yeah, great. Thanks to the judges for helping out the girls and the boys. So, without further ado, the runner-up team of today is Team Horizon. Congratulations. And then the winning team is Pain Prospectus, and we have prepared your vouchers for you. Come, can we hand them up here, please? And we'll take a quick photo up. Teams, you have to come here. Hold this, because you're the... Exactly. Come step forward. One more judge here. So if anyone is interested to helping out with this, either sponsoring, becoming a judge, becoming a mentor, come and see me at the cocktails, which will start just shortly after that. Seth and I will just show you one more slide, the last slide of today, I promise. And then we can all go to the well-deserved cocktails, which we have moved down to the amphitheater. So the way to the cocktails will be down here. Yeah, not the roof terrace. The weather has not been kind to us today. Great. Thank you very much.